Vanguard Lifestrategy funds. If you're familiar with investing or finance in general, you may or may not have heard of Vanguard Lifestrategy funds. These are a super popular option for those people who want to have everything kind of done for them and let the hard work be done on their behalf. So how do you pick the right Vanguard Lifestrategy fund for you? How do you work out if they're right for you? Well, let's have a look, and I'm going to go through a few key questions which you can ask yourself to work out exactly which might be the right Vanguard Lifestrategy fund for you. Of course, it goes without saying, I can't give you tailored financial advice to your individual needs and preferences, and I am not a registered financial advisor, so if you do wish to seek individual financial advice, please go and do so from an accredited and reliable source. So first things first, what are Vanguard Lifestrategy funds? I'm going to go through this super quick because I'm assuming if you're on this video then you already have a brief knowledge of what they are. Essentially, they're a collection of funds they're a big collection of funds. There's 5 available options, and each of those is comprised entirely of Vanguard funds. So Vanguard Lifestrategy funds, there's a 20 option, there's a 40 option, a 60 option, an 80 option, and a 100. So the number on the end basically dictates what percentage is allocated to stocks and what percentage is allocated to bonds. So if you have a 20%, then 20% is allocated to stocks and 80% of that is allocated to bonds, and then the 40% stocks, 60% bonds, and so on and so forth as you go up the ladder of percentages. So how do you actually get invested in Vanguard Lifestrategy funds? They're pretty easy, pretty straightforward. The cheapest way to do so is to invest through the Vanguard platform themselves. The fund fees are very cheap, something in the region of 0.2%. And I believe if you use it on other platforms, then the fees will be similar. Maybe there might be some slight variations depending on where you invest in the Vanguard Lifestrategy funds. So how do you work out whether a Vanguard Lifestrategy fund is right for you? Well, the first key question to ask yourself is how much effort do you want to put into your investing? If you're a lazy person or you just don't want the stress, effort, and you don't want to have to undertake lots of research, then the Vanguard Lifestrategy funds may be a good option for you because they are a preset fund, fully diversified. As I said, it's not like a single ETF or a single fund where it's made up of just a list of companies. It's listed of individual funds within that. So say you have Fund A, Fund B, Fund C, Fund D, and then all of these are centered within the Vanguard Lifestrategy fund. I know that's maybe a bit of an oversimplification there, but that's basically how it works. And each one is allocated different percentages, and they're also globally diversified all over the world. And just full disclosure, I also have Vanguard Lifestrategy funds because I'm a lazy investor and I don't want to necessarily do all the research. Yes, if you do your own research, you do have the possibility of getting possibly greater gains from picking like the right companies or the right stocks. But Vanguard Lifestrategy Fund offers a nice, cheap, easy solution whereby you can invest in a wide variety of stocks for a cheap price and without much effort as either. If you've determined then that Vanguard Lifestrategy funds are for you and that you wish to put some in, then another key question in order to start picking the right fund for you would be, how old are you? So by this, it could be if you are a younger investor, so if you're within like the 18 to 30 range. I'm generalizing here, don't kill me if you class yourself as younger when you're like mid-30s or something. That's absolutely fine, no judgment whatsoever. But if you're within the younger age category, then potentially you may wish to take more risk because you're going to have longer in the market in order to deal with any dips or any crashes which may appear. And as long as you have that long-term mindset, then you've got the longer term to grow. So therefore you may wish to go for a higher risk one. So you may wish to go for like an 80 to 100 one. So that's whereas if you are maybe later on in your career or thinking about using the funds soon, so maybe you're like 50s, 60s, then you may wish to go for one which has a bigger percentage allocated towards bonds, which in theory are less volatile and should give you a more steady income over time. The next question, which kind of links to that, is how close you are to retirement. So by this, I'm guessing that, the vast majority of people that are investing into these life strategy funds, I mean, it's in the name life strategy, that the whole goal is that it's for your lifetime. You invest in this one fund for your entire lifetime. So when you are close to retirement, again, I guess it's kind of similar to the last one, but you may wish to or downplay the risks that you're doing. So you may wish to diversify away from 100% stocks and into 80, 60, 40, whatever it is going to be right for you and how you work. The next question that you may wish to ask yourself is what your risk tolerance is. So even if your age may be irrelevant, if you're the sort of person who's in their 20s or 30s and doesn't like risk, then that's absolutely fine. In that case, you may wish to go for a lower risk one. The only thing with that, obviously, is generally speaking that the lower risk that you have, yes, it means that you're going to be less susceptible to the impacts of a crash, but also the less likely you are to make the bigger gains in the bull markets and in the good times. So that's just something to bear in mind. But obviously, if you're the sort of person who maybe reacts emotionally to things, or you know full well that you don't want to see your money drop, as long as you have that long-term mindset, then generally speaking, things will be okay, as long as you're not going to need that money in the short term. But bearing in mind your risk tolerance, there's lots of different ways that you can figure out what your risk tolerance might be, whether you like taking risks on and you like taking like a big career move, or would you like to go abroad and move somewhere and up and leave, or do you quite like the security and the stability within your life? So those are a couple of extra additional questions that maybe you can use to figure out exactly what your risk tolerance might be, and therefore adjust your Vanguard Lifestrategy fund accordingly. And then the final question might be, is what alternative options are there to this? So yes, Vanguard Lifestrategy funds are great over the long term, in that because they are diversified, they're passive, all the work is done for you. You also don't necessarily need to get a financial advisor or speak with them on a regular basis. But obviously, if you want to consider your other options, then it may well be that getting a financial advisor will help you. So there are different other options as well. If you want something which is going to automatically adjust your risk over time, then there are what's called Vanguard target date retirement funds. Again, I'm sticking with Vanguard here because there are other funds and providers available, but I think Vanguard is one of the more popular ones, and one of the ones which I believe in because they're one of the largest financial institutions in the world, and their products are very key, and also they focus on low cost, which is something that I personally believe in. Now, with the target date retirement funds, essentially how these work is that you can pick a date in the future where you plan to retire and plan to use that money, and then essentially how it will work is the risk and bond allocation and stock allocation will change over time according to how close you get. So say, for example, if I was to pick 2060 as a target date retirement fund, that seems a long way off now, but it will come round. So say like around now, it might have like 80, 100% or 80% in stocks. And then the closer that you get, so say 15, 20 years down the line, it may change into 60% stocks. And then another 10 years down the line, it may change to 40%, etc. So it kind of changes that allocation for you. Now, of course, the same points go as before. This may change according with your risk tolerance, but additionally, if there is a big bull run and then you've changed over to bonds, you may miss out on some of those gains, which further down the line, when you're getting closer to your retirement, that may have helped you in order to gain a bit more money and get you set up. Something to think about. Additionally, if target date retirement funds are not for you, some people don't like that kind of de-risking, but sometimes that works for people, especially if you want to have more of a guaranteed income towards retirement, then it may just be worth looking at some regular ETFs, and again, ones which align with your risk tolerance. So maybe, earlier on you might go for some higher risk ones into new and emerging technologies, or you might go for ones with high potential for growth, and then further down the line you may choose to allocate more entirely in bonds or into some safer investments which align with you, your preferences, and your risk tolerance. So what are your thoughts? What's your favorite Vanguard Life Strategy fund? Do you have one? I mean, at the moment, because I am young and I've got, a decent amount of time for it to grow, I'm fully in Vanguard Life Strategy 100 funds because I wish to have the biggest chance of growth that I possibly can, but I'm interested to know your thoughts as well. So please do let me know in the comments, like, subscribe and all that good stuff, and I'll see you in the next video.